Hi, this is Mike Maloney, and I wanted to do a quick update on the gold and silver markets and what's been happening in them lately. It is February 20th. It's late on Saturday night, getting close to midnight here. The markets are closed, and I was just looking at charts. A lot of people have been calling a breakout for gold and that the bull market is back on again. We've been in a cyclical bear inside of what is called a secular bull market, a major long-term bull market that started back in 2001. And for several years here, though, gold has been falling. I absolutely am firmly convinced that gold is destined for far, far, far higher prices than the $1,900 that it hit back in 2011. This is basically the same as the pullback that gold went through in 1975 and 6, where gold went from, it had risen from $35 to $200 on the last day of 1974. It hit $200, and then first day of 1975 it started to fall, and it fell until I believe it was September of 76. And it lost 50%. It fell all the way from just a breath away from $200 all the way to $103. So what you see here is people have been drawing a trend line from this peak here in 2012 and touching these two peaks in 2015 and calling that the breakout, and that is true. You can also draw from a few peaks here in 2013, 14, and early 2015, and we broke out past that resistance of that trend line. But when you go back to the $1,900 high and the peak here in 2011, and you draw across those, there's still going to be some resistance when it gets up into the over $1,400 area. There's going to be some sort of resistance there, and the reason that I think that we're probably going to do a little bit of a pullback here is because silver has not confirmed gold's move, in my opinion. If you draw a trend line going back to 2013, incorporating a few of these peaks, yes, it broke that. But if you draw a trend line going back to the $48 high and incorporates these hits, what happened is we rose right up to that trend line and bounced off of it. Now, I did a little bit of further charting on gold. Now, I've said this many times, technical analysis is right about 60% of the time, which means it's wrong about 40% of the time. So I really don't follow technical analysis that much. I'm just trying to take a guess here of what's going on. And when I went and looked at the entire bull market of gold going back to 2001, and I did some Fibonacci retracements here, these Fibonacci lines. And then I put in a moving average, and I just played around with it, and I settled on a 42-month moving average. This is a monthly chart. What you see is this, by selecting the 42-month moving average, it is basically the previous 42 months of price action at any given time, added together and divided by 42, and you end up with incorporating this entire bull market, and without the 2008 pullback piercing through it. But what you see is that it does incorporate that entire bull market. It rolled over because we've been in this cyclical bear inside the secular bull market. But there's the 38.2% Fibonacci retracement that just about exactly lands on top of that 42-month moving average. So we have to get significantly up above this $1,300 area and then break through that $1,400 area from that trend line that I showed on that first chart. So what I think may happen here is over the next few weeks, gold may do a pullback, but then it'll probably put in a higher low. So I believe these are some of the final buying opportunities is what we're coming up to here. It'll put in a higher low, and that will make an inverse head and shoulders pattern, an inverted head and shoulders. So here's a shoulder, There's a head, and there would be another shoulder if this did a pullback and then bounced. And, this is just pure speculation, but it just seems like this might be something that it does. Silver would then do the same thing, put in a higher low. If it doesn't go lower than those lows back in 2015 and then comes up and surpasses what's called the neckline, you draw a line across these two peaks. Once it does that, we've got a springboard launch for piercing all of the resistance lines and getting back into a really solid bull market here. I believe what we've been going through this past few years, this pullback, is nothing but a cyclical bear market inside of a giant secular bull market, and that gold and silver are destined for amazingly higher prices than they are right now. The world, the stock market, and the economies are on very shaky ground right now. And I don't think 2016 is going to be a good year. We're going to look back at this as a major turning point, and 2017 and 2018 are probably going to be just awful for the general stock markets and for the global economies in general. So I really think that this is the shift, and we may have already put in the bottom. And so that's my take on things. Thank you very much for watching this, and we'll see you next time. This video was brought to you by goldsilver.com. I'm proud to say we've been one of the most trusted dealers for over a decade now. We have fast, free shipping and a price match guarantee. While our competitors serve you ads, we serve you education. And that's the difference with goldsilver.com. To learn more, click the info button. Thanks.